What's up, everyone, and welcome to That Crypto Hustle, a community podcast and a one-stop shop where visionaries, entrepreneurs, and hustlers share their blockchain and cryptocurrency expertise. I'm your host, Luna Vega, a digital marketer turned crypto addict, and my goal is to help spread blockchain and cryptocurrency awareness, all while fostering collaboration between all of us. If you dig the show, make sure to give us a review on iTunes, all while following us on Instagram, YouTube, and or Twitter. Let's do this. Hey guys, Luna here, and welcome to another episode of That Crypto Hustle podcast. So in today's episode, I want to talk about this very important issue, especially the idea that STOs are taking over and might replace ICOs. So in 2017 and 2018, companies in the blockchain space raised as much as $1 trillion by launching initial coin offering, ICOs. However, with the lack of proper regulation, a backlash happened, opening the gateway to many scammers. So fast forward to today's ecosystem, we are experiencing stricter regulation. Some argue that it's for the better good. Some say that it's slowing down innovation. And with it, obviously, the rise of security tokens. So I've invited today Jonathan Galea, who's a blockchain advisor based out of Malta, to discuss whether or not STOs will replace ICOs. Hey, how's it going, Jonathan?
Hi, Luna. Doing very well over here. Thanks for inviting me to the show.
Yeah, I'm excited to have you here today. So I guess I'd love to hear how, because you've been in the space for a while, how have things changed now that we are in 2019, and what kind of requests you're getting from your clients as far as whether do they want to create STOs or do they want to create ICOs? What are some of the things that you've seen that have drastically changed in the blockchain ecosystem?
Yeah, so I think it would be also beneficial for our viewers to also perhaps go through a brief history of what led to this current moment in time. I remember back in 2013, when most altcoin projects started popping up, I would say that they were all about releasing, let's say, open source software, no pre-mine, just letting the community, let's say, participate in the projects themselves. So it was all very much open source, liberal, and so on. And then along came pre-mines. So there were certain projects being initiated whereby the creators would allocate a part of the tokens for themselves and use it for development, marketing, and so on and so forth. After that, we saw the first ICO taking place, the Omni ICO, whereby again the tokens were pre-mined and they were also sold to some initial investors. We saw the great spike in ICOs taking place in 2017 up until January 2018. And then, of course, we all know what happened. Nowadays, it seems as if, yes, there's a burgeoning interest in STOs as well. And the reason is that we're seeing a lot more interest from the traditional sector, so to speak. Those investors who would like something which, again, gives them comfort, something which is, let's say, backed up by something that they recognize, something which has real world value in their eyes. So again, we're seeing the likes of asset-backed tokens, tokenized equity, and so on, which is again gathering a lot of interest both by investors and those, of course, pushing for the technology alike as well, because ultimately STOs would offer certain advantages over traditional offerings such as IPOs.
Got it. So why do you think security token potentially could be the future? And and in your opinion, are regulations going to help us? I think I read a figure somewhere that and I know that we're still in the very early stage of STOs, but the rate at which STOs are being launched or registered is much lower than what we saw with the ICOs.
And yes, and there's a very good reason for that. Let's keep in mind that STOs are not a novel method of funding. We're basically talking about method of funding which exists within existing frameworks. Essentially, we're talking about security offerings which, again, have to be compliant with regulations that have been around for several years. So we're talking about, let's say, the old meeting the new, so to speak, whereby these securities are being offered to the same market as has been done before. but with some interesting twists, which would of course give them an edge over traditional offerings. Blockchain technology allows for such STOs, first of all, to reach a much wider market. Secondly, it also offers certain benefits of blockchain technology. You have traceability, transparency, immutability of all this, let's say, particulars of the sale itself. Even post STO, you can definitely have a better monitoring of how the tokens are being distributed. And ultimately, again, we're trying to move to zero settlement in certain cases. And as well, of course, as I mentioned first, we're also opening STOs to a much wider market, whereby fractional investing in these STOs would be allowed through blockchain technology. So that's what STOs bring to the table, and that's why, again, we're seeing both a lot of interest in them, but also, of course, the fact that they're a bit slower to, let's say, catch on with the investors is precisely due to the fact that we're talking about a regulated environment right from the get-go, as opposed to ICOs, which, of course, flourished in mostly unregulated environment.
So how can a startup essentially leapfrog the complex regulatory compliance needed to register security tokens? Is there any way to do so, or?
Ultimately, and again, I'm going to talk mostly from a European law perspective, it would need to slot itself, or it needs to cap its offering up to a certain amount in terms of the amount being raised. So there are various exceptions which, of course, a startup can slot itself into and not need to adhere to the full framework, so to speak. And therefore, of course, it would lead to both a more cost efficient as well as a quicker offering. Other than that, I would say that it would mostly depend on whether some jurisdictions might see it fit to introduce some form of sandbox for these kind of offerings, and therefore allowing for a more monitored environment, but perhaps with lower thresholds as well. Other than that, I'm afraid they will still need to comply with all the regulations that are currently in place in the relevant jurisdictions.
And what do you mean specifically by sandbox?
Well, I mean, for example, the Financial Conduct Authority in the UK has implemented a sandbox when it comes to, let's say, blockchain-related activities, including as well certain projects which might see themselves being funded from ICOs. And the way that the FCA is conducted in the sandbox is that it allows certain vetted projects to participate in the sandbox. They are allowed to operate within a controlled environment with certain pre-established rules for such persons participating in the sandbox. And then, of course, if the trial period, let's call it that, during the sandbox proves to be successful, then they, of course, be led towards forming part of the let's say, the normal regulatory framework.
Got it. So, I mean, essentially, it's just like being a qualified investor in other platform, but in this case, it's just being a qualified blockchain company who could participate in the sandbox. Got it.
Correct.
So I know firsthand, because I spent some time in Europe, that there's a lot of hype around registering in Malta, especially during the initial coin offering era. Is it still the case when you're trying to register an STO? Or is Malta mute at this point? I mean, you probably have a biased opinion, but I would just love to hear if there's been sort of a change in the kind of request companies have in registering in Malta.
Yeah, so again, I'll try and be as objective as possible, of course, but ultimately the reason why there are quite a few companies that flocked to Malta, especially when the regulation came out, is precisely because of that. I mean, right now, there has been no other jurisdiction, particularly in Europe, which offers a holistic framework when it comes to the offering of ICOs, as well as certain services, including exchange services. However, this is not the case for STOs, because Malta already operates in an EU-wide environment under the auspices of the so-called MiFID II directive, so Markets in Financial Instruments Directive, which is an EU-wide piece of legislation that all EU member states have to abide by. So if you want to do an STO from Malta, you don't just need to adhere to Maltese law, but really and truly, you also need to comply with European law as well. So therefore, in this particular case, I think we've pretty much been afflicted with what you've mentioned earlier on about STOs not being so quick to catch on yet, precisely because you need to conduct an STO within an existing framework, and keep in mind that these frameworks have been created before the concept of STOs came along. There are certain deficiencies in the regulatory framework which do not cater for such offerings using blockchain technology. And this needs to be addressed as soon as possible if we want to see STOs catching on.
So, based on where the blockchain startup company is coming from, originally from, whether it's Asia, Europe, or the US, are you seeing different requests from these startups?
I would say that if I were to sort of almost, let's say, pigeonhole some of the requests that we're receiving, ultimately, first of all, the requests that we're receiving from European startups makes them a bit easier to deal with because, of course, we're talking about a framework that they are familiar with. So they might have already been through another security offering in the past, although not necessarily involving blockchain technology. And therefore, when we tell them that they'll be passing through the same hoops, then of course they immediately understand that. When it comes to the US, we understand, of course, that the US has been pretty much tough about its stance on tokens and treating most tokens that we know of as securities. And therefore, any startups coming in from the US are quite familiar with the securities framework. And again, the European framework, although similar, has some differences, but again, it doesn't take a lot of time to get used to them. So when it comes to the Asian startups, they do have a different regulatory regime to abide by, which is a bit different than the European and the American one as well. So ultimately, we haven't seen a lot of interest coming in from the Asian market when it comes to STOs, quite likely due to the fact that they might be conducting such offerings in their own jurisdictions, because of course they are more familiar with those sets of regulations rather than with the regulations being, let's say, in effect in Europe and in the US. Keep in mind that when conducting an STO, you need to abide by all the regulations of the jurisdictions of the targeted investors. So unlike ICOs, where you're conducting an offering, where it's most likely that the investors you're targeting are not set up in a jurisdiction where the offering is regulated, because ICOs are still pretty new, this is not the case with STOs. So you always need to ensure that wherever you're targeting as a jurisdiction, you need to comply with all different sets of regulations in each and every respective jurisdiction.
Right, which I mean could potentially slow down the blockchain innovation. But I mean, so it's funny because there's two different camps. There's the camps who are pro-regulation and think that it's going to help the market mature. And there's the other camp who is completely anti-regulation, saying that it's affecting the industry, which it is. And I mean, sort of pushing it back as well on consumer, which I think is not fair, saying that consumers should do a better job educating themselves. So, I mean, how do you think we can sort of find like a happy medium? Because I do agree that we've seen quite a slowdown. How can we bring back some of the spirits that we saw with the initial coin offerings, in your opinion?
I would say that I myself am more on the pro-regulation camp. However, I'm only in favor of regulation when it's about regulating those intermediaries or centralized third parties which are somehow involving themselves in the blockchain industry. So we're talking about exchanges, brokers, custodians, those conducting ICOs as well, because of course we're talking about centralized issuers in most cases. All these different parties need to be regulated. Because ultimately, yes, I do agree that the general public needs to educate themselves before, again, investing in this particular space, since it's quite new. But ultimately, there's no defense against fraud or other, let's say, willful intention to steal people's money. So those kind of actions need to be regulated and they need to be sanctioned. So I'm all out in favor of such regulations being introduced to safeguard the end consumer from the actions of trusted third parties. However, at the end of the day, when we're talking about the core technology itself, I would say that, first of all, it's very difficult to regulate something which is decentralized in nature, if not outright impossible. Secondly, regulations should never seek to stifle innovation. So again, I'm all out for protection of the end consumer, but ultimately we should talk about regulations and not restrictions, because ultimately there's a fine line dividing the two, and we should never step over into restrictions.
So, do you think STOs are going to completely replace ICOs? Do you have companies are coming or startups that are coming to you guys right now and asking for initial coin offerings? Does
We are
it
still
even,
seeing it.
I mean, does it even make sense anymore?
Yes, I would say we still receive requests for ICOs. We've also seen, of course, an increasing request in STOs, and I think the two can happily basically coexist with one another. Reason being that, again, STOs are security offerings. We're talking about offerings within a regulated environment, and it's just the way of distributing such tokens and the way that these sales are conducted that's going to change.
And it
But the
needs to be
framework is
backed,
there.
and it needs to be backed with an actual asset.
Exactly, exactly. Now, when we're talking about ICOs, that is truly in itself an innovative way of funding one's own venture. And I would say that technological innovation, will be driven mostly by ICOs and not by STOs. We've seen lots of very interesting projects being born through ICOs. And again, most of them are still being developed, although maybe in silence. Of course, the current market has led to some of these startups shutting down their operations. But ultimately, I think those which will survive will usher on a new technological era. And again, I'm still a true believer in ICOs. I think that, again, the era of ICOs will come around once again. But let's also keep an eye out for STOs, which are increasing in interest, and they will have their place as well in this day and age.
Why do you think ICOs will usher innovation?
Because ultimately, when we're talking about the development of a decentralized platform, the platform itself, the software, it wouldn't make sense for a centralized entity to own it. So how can you do an STO for the development of a decentralized open permissionless blockchain? It wouldn't make any sense at all. So the only way to fund the development of an open permissionless system would be through an ICO, whereby the team has the funds to develop this particular system, and then the system will have a life of its own. But ultimately, the funds would have been used in order to develop this platform. And again, if this platform grows in popularity, then so will the value of the tokens itself as well. As long as the ICO seeks to build something of value rather than just something of speculation, I'm quite sure that the ICO will succeed both in the short term and the long term. And that's why I see ICO still having a place, of course, in this technological revolution.
But if I understand correctly, as a retail investor, when you're buying a coin from an initial coin offering, you're not able to trade the coin. Essentially, you just have to wait on the value of the actual coin to increase. Versus when you're purchasing a coin with a security token, then you can actually like trade those assets.
I mean, currently I think the situation is quite inverse, whereby, again, in the case of ICOs, you are being distributed tokens, and sooner rather than later, they are listed on some exchanges, and you can trade them, both in the form of, let's say, of tokens that are issued as a placeholder until the mainnet is launched, and then you can, of course, exchange them for the mainnet coins. Or sometimes ICO issues the mainnet coins immediately, and they can start trading the proper coins that are used in the developed protocol straight away. Whereas in the case of security tokens, right now, there are very, very few exchanges where you can actually list and trade security tokens. So I believe there's been T0, which has launched very recently, and I'm not aware of any other security exchanges which have started up in the US, let's say. So ultimately, you are left with tokens, in the case of security tokens, which might have a problem of liquidity in this current period. Now, of course, this might be set to change in this year, or perhaps the next, when we'll see more security token exchanges. But right now, I would say that security tokens do have an issue of liquidity.
So what would you advise startups who haven't registered yet? Obviously, I know they're completely different business model, but what would be sort of their next steps if they're trying to get some form of funding? What are some of what is a checklist they could essentially start doing to figure out what's the best route for them?
I would say that the first point of departure needs to be, do they actually need blockchain technology, both in development of their platform as well as for the offering itself? If they're just looking to use blockchain in order to entice certain investors because it's the latest buzzword, I would say, listen, it's not worth the effort. You might get the funds you require, but if you don't develop something which is of value to the investors and the users alike, you simply end up into a load of trouble later on. Because, of course, you will have fiduciary obligations to your investors, and if you don't uphold them, then you might land yourself in some trouble, even though you conduct the offering in a non-regulated jurisdiction. Secondly, you need to see the business model which is looking to be engaged. Are you looking to offer something that is a product that can benefit from blockchain technology and can actually make use of a token? Or are you looking to develop a product which does not per se utilize blockchain technology, but the offering itself would make a lot of sense if it were to be done through blockchain? Once you identify either or potentially even both, and you're more than free, of course, to conduct both offerings, then that's when we help the clients structure up either the offering through the form of an ICO or through the form of an STO. Ultimately, again, you need to give value to what you're doing. If it's an ICO, you need to ensure that the token you are issuing actually represents value to the users. So it shouldn't just be a speculative tool, but should actually offer something to the user which would lead them to actually buying the token and make use of your platform. Likewise, if you're conducting an STO, you need to ensure that the platform you're using, that the token you're actually issuing, makes life easier for the investors when it comes to trading and exchanging ownership of such tokens. If it doesn't do that, then basically an STO is not for you. And once again, if the token doesn't offer something of value to current and future users, then again, an ICO probably is not the best route of funding for you.
So I know firsthand there's a lot of different fintech company who are adding a cryptocurrency component to their working prototype. How does that work for them? If they're, for instance, like a payment system, if you will, so do they also need to register? I mean, I assume they do. And if so, like, how would that checklist apply for them?
We're talking about registration in Malta, and they're looking to issue a cryptocurrency for let's say for payment purposes. First of all, it depends on whether they want to issue it through an ICO or not. If they want to do it through an ICO, then yes, they need to register their white paper with the Malta Financial Service Authority and then conduct the offering. However, if they simply want to issue the token to their users without an ICO, then they do not need to go through the white paper registration process. They can simply issue the token. However, before issuing the token, it is always strongly recommended to undergo what is known as the financial instruments test, which is a test implemented into Maltese law. And basically what it does is it classifies your token under one of the four following categories: financial instruments, which is the equivalent of securities in other jurisdictions; electronic money; virtual tokens; and virtual financial assets. Just by way of a very brief overview, virtual tokens are tokens that are not traded on secondary markets, and they are used within a limited network for the acquisition of goods and services. Electronic money is basically the equivalent of digital fiat money, and it has certain attributes which would render it as electronic money and therefore regulated under European law. If a token does not classify as a financial instrument, e-money, or virtual token, it is automatically a virtual financial asset. One point worth mentioning is that stable coins might potentially classify as e-money, but if they have certain attributes which would make them fall outside the scope of the e-money directive, then they would not classify as e-money, but they would classify as virtual financial assets. One example being Tether, which under the financial instruments test, it appears to us that it does not classify as electronic money and therefore can be treated as a virtual financial asset.
Got it. So just to, because as we're wrapping up, I'd love to hear how you got into the blockchain space.
Okay, I have to mention that I'm a lawyer by profession, but I got into space back in 2013, and I know it might sound very strange, but I was building my own laptop back then, and there was a shortage of graphics cards. And while I was doing some research trying to see where best to buy the graphics card that I wanted, I came across an article saying that the shortage is due to the fact that there's a lot of miners buying them for Bitcoin mining. And
What a weird
I was like,
coincidence.
I was like, okay, what's this? Started reading into it, and back then the price of Bitcoin was around $80. So I was rather intrigued by the whole concept. I managed to build my laptop, but then I set out to build my own miner, and as they say, the rest is history. I got completely hooked on the concept, and well, here I am today.
That's amazing. What a great story. Awesome. So
Thanks.
where can we find more information about your group? Because you have several Facebook groups. And what else?
Yeah. So
Where can we
information
find you
about
on
my
social media? Yeah.
yeah. So you're free to visit my website, www.bca.com.mt. I'm also quite active on LinkedIn, Facebook. We run the largest group in Malta dedicated to blockchain cryptocurrencies on Facebook, called Bitcoin Malta. And I also tend to be in quite a few conferences across Europe, the US, and also Asia. So I'm normally a speaker in such conferences. So for our viewers, if you ever see me there, please feel free to come by and say hi, and I'll happily engage in a conversation on this topic.
Which conference are you going to next? And are you coming to the US anytime soon?
I should be coming to the US in the second half of this year, and the next conference I'm going to is Token 2049 in Hong Kong, which is taking place next month in March.
Nice. Awesome. Well, make sure to check by and say hi. Awesome. Thank you
Looking
so
forward.
much. Yeah. Thank you so much for taking the time to speak to us today. Really appreciate it. Lots of amazing information, Jonathan. Really appreciate it.
Thank you. It was a pleasure.
All right, guys. Well, thanks for tuning in. And as always, make sure to provide us a review or give us a review on iTunes as we're trying to grow the podcast. Until next time, see you guys. Bye, Jonathan.